Hello everybody, welcome to another video. This one going over dealing ranges, what they are, how you can utilize it, and add it to your model to find optimal positions to enter on. Now, before we get into it, what is a dealing range? A dealing range is a tool that you use with the fib retracement to mark out the high and low of a range. And I'll get into exactly how you can find the specific proper range to measure the premium and discount of a full range. Anything above the midpoint is what we classify as a premium array. Anything below the midpoint is a discount array. In the discount lower half is where you can find optimal longs if it pairs up with your model. And in the premium, you can find optimal shorts if it pairs up with your model. Now, this allows you to find highly optimal entries at very, very optimal prices. Before you get into anything, you need to know exactly how to find a proper dealing range. Now, finding an optimal dealing range is when you mark the high and low of a range where both ends of that range have swept liquidity. You have this move up here that took all these highs that swept liquidity to the upside, and then price retraced to this low, sweeping this sell side liquidity right here. So the sweep of this 50-minute sell side liquidity, and you have that dealing range. The high took liquidity, the low took liquidity. That is your dealing range. Now within this dealing range, you can find optimal longs if you have objectives to the upside. If there are draws to the upside and you want to see prices move higher, you can find an optimal long in the discount, the lower half of this dealing range. And that is an optimal area to look for an entry. Now, we have several highs above, several draws where price can gravitate towards. So yes, I would say this is a very good long to look for. You have this opposing buy side liquidity that is in the premium of that range. And you have price that just swept sell side right here. So upon this move here, you can now look and say, okay, do we find an optimal long in this at this point? I will mark out over here this right here. This is, let me make sure it's 685.25. This is the discount of dealing range right here. Discount of dealing range, and here is the premium of dealing range. Right around here. Let me just make sure the coordinates are accurate right there. So this is exactly what the dealing range consists of. Now this is the premium of dealing range. Premium of dealing range right here. And this is the midpoint right here. Midpoint of dealing range is right over here. Now, why did I pull this out? Because when you get that fresh sweep of liquidity here on the sweep of sell side, and you have draws to the upside, if there are objectives to the upside, if you think the drawn liquidity is above, an optimal long will be found in this half here. Not in this half. You don't want to take longs in the premium of the dealing range. You want to take longs in the discount. In this bottom half, the blue box right here, this is where you will find optimal longs right here. And that's how you utilize the dealing range to find where you can get those optimal longs. So I'll remove this fib right here. You have it clearly defined right here. This is the optimal longs in here. That's the premium. This is the discount. So what do we have here? Price swept sell side liquidity on the 15-minute. Price then reversed, broke structure, formed a breaker right here. Plus breaker right here on the 1-minute. Change the state of delivery to the upside. If you go to the 2-minute, you see that we have a fair value gap right here in line with that breaker. Right here, here we go. So fair value gap right there, breaker right here. In that discount, get that change in the state, you get that break structure, you get that clean fair value gap, clean breaker right here. This is an optimal place to look for long. So you can long at this point of the retest of that breaker on the 1 minute, fair value gap on the 2 minute, whatever it may be, and target the opposing liquidity on the 15 minute. Now, you can target the complete other end of the dealing range, but I prefer to target opposing liquidity in that direction. That's it, that's all. So let me just move this further here. Here it is. And so the optimal long is found in this lower half. And so you get the confirmations. After that sweep of liquidity, drawn liquidity is above. Clear highs above for price to come and take out liquidity. Clean confirmations on the lower time frame. In the discount of that dealing range, you get that breaker entry, fair value gap entry. And so you enter upon that, targeting that opposing buy side liquidity. That's it, that's all. And you let the trade play out. And if the direction is correct, the timing is correct, and the draw is correct, price will gravitate towards that buy side liquidity. And so there you go. You get a almost 140 point move in this model. You get that sweep of liquidity. You get that reversal, change in the state, breaker, fair value gap, entry in the discount of that dealing range. This is an optimal long. You're using that dealing range to measure where are you in terms of price. Where are you? Are you in an optimal place to take a long? Because in this half here, the premium, that is not always optimal to catch a long. You're better off looking for longs in the discount of that dealing range. And so this is how you can use dealing ranges to your advantage. And I'll provide another example. All right, so here's another example of how you can utilize that dealing range to your advantage and find an optimal entry within your model. And so look at this sequence in price right here. We're in this AM session right now and price swept this low. How can we find an optimal entry to target the upside? Why would we target the upside? Well, look, in this sequence of price action, price came, formed this high, formed a low, came, formed this high that did not take this high, formed another high that did not take this high, formed another high that did not take this high. So we have clear highs here, clear liquidity to the upside. We have 1, 2, 3, 4, 5 highs that have not been tapped into, whereas the lows are being swept. And so into this AM session, we have a sweep of this sell side liquidity right here with clear highs to the upside where you can find an optimal long. But now, how do we utilize that dealing range to find the optimal half, the discount where we can find that long? Well, we measure the dealing range by finding the high that swept liquidity and the low that swept liquidity. So we have that low. Clearly, this low swept this sell side liquidity. Which high here swept a high? And it's clearly this one right here. If you look to the left, price swept this high. We have a sweep of buy side liquidity right here before price came and never swept any high once more before sweeping this low. So from this high to this low, that is your dealing range. And so an optimal long would be in this lower half. And there is reason for price to go to the upside. We have clear liquidity to the upside. We're in that AM session. Price can definitely make a move to the upside. And so what I will do is I will form this. You will see in this lower half here, this is where you will look for the optimal long. This is the discount. So in this half, this is where you want to find your long. Discount of dealing range right here. Price sweeps sell side liquidity on the 15 minute. We're in that discount. What I want to do now is look, do we get certain signatures in price? That price can make a move to the upside. And what we can do is target these opposing buy side liquidity levels. We have buy side right here. You can target that. Buy side right here. You can target that. And if you want to target the complete opposing end of that dealing range, if it seems suitable, you can target that as well. So I've given you several levels here that you can take partials at and target for a clear move to the upside. And so we will see if we get that entry and the confirmations on the lower time frame. So we're in that discount of dealing range, clearly right here in the lower half. Price then comes after that sweep. We get an internal sweep right here. Internal sweep. Another great signature in price. Now, if price gives us the confirmations to go long, price should not come back and take this low. Why? Because we've already swept a low right here on the lower time frame. We have an internal sweep here. Price should not come and take this low once more. There should be no reason to. If the clear draws are to the upside, if you have the direction correct, price will go to all of these highs here, all of them, with a clean move. Potential breaker forming right here. Right there that you can find a long into. So we wait to see if we get the validation. And so yes, we do get that breaker confirmed. We have it for value gap. And we can look on the other time frames. Do we have more confirmations? Inverse gap here on the 2 minute. Let's see the 3 minute. 3 minute, we haven't inversed anything. No confirmation there. On the 5 minute. Inverse this gap here as well. So we have a 5 minute IFEG as well. So we have all of these confirmations. Everything is consistent in price. Let me just move this here. All while being in the discount of that dealing range. Internal sweep. 1 minute breaker right here. 5 minute inverse gap right there. 2 minute inverse gap right here. The state of delivery has changed on the lower time frame here. This is where you can look for a long. 5 minute closes inverses this gap. You don't necessarily have to wait for the breaker if the risk to reward makes sense. And you can target all of these opposing highs. And so this would be around a 2.85 to 1R, almost a 3 to 1R. Clear confirmations on the higher time frame, clear draws and objectives on the higher time frame, clear confirmation on the lower time frame, all while being in the discount of that dealing range. You use that range. This is the discount, the lower half. This is an optimal area to look for longs. And so you wait for the retest. We're in right here. And you target those opposing liquidity levels. And so price then ends up going around 390 points almost for a clean move to the upside. You have clearly defined your objectives. The 15-minute objectives are clear. 50-minute sweep of liquidity. We're in that discount of that dealing range. 1 minute internal sweep. 1 minute change in the state. Breaker formed. 5 minute inverse. 2 minute inverse. 1 minute inverse. Price should not come back to this low if you have the direction correct. And we had the objectives clearly defined. Price should go to these highs. There's clear liquidity to the upside. And if it all makes sense and everything's in alignment and you're in that discount of that dealing range, price will go to those draws. And so this is another example of that. Price came, dug into this breaker as well, respected it, and made a move to the upside, taking all of those opposing highs. All of that liquidity got swept. And so you find those draws, you measure that dealing range, and you saw we entered in the discount of that range. So that's an optimal place to go long. And it's a vice versa for shorts. So this is how you can utilize that dealing range to look for this optimal long right here. This is an optimal long to take. And so there's another example of how you can utilize that dealing range. All right, so another example of how you can use this dealing range to your advantage to maximize the highest optimal entries surrounding your model is in this example as well. You can see we are in the AM session here. It's around 10:15 around. 50-minute candle comes and sweeps this low right here. So we have a sweep of sell side right here. Sell side sweep right here. We're also, if you pay attention here, we're within a 15-minute bullish fair value gap. That is being respected from this point here. You're seeing price wick down. Midpoint is being respected with the bodies. If you look here, midpoint being respected with the bodies here. Bullish indication right here. We have highs above that we've left. And where do we form this dealing range? It is right here. This high here, swept liquidity right here. Coming down, this low, swept liquidity right here. No high, swept liquidity until that point. this low swept liquidity from this point in the AM session, giving us a good potential reversal to the upside. And so from this point, already on the 15-minute, I can see points where I would have interest to scale out and target. So number one there. And then you can either, again, these are options. Midpoint of the dealing range you can use as a potential target. The high of this point, the low of this imbalance here, you can utilize as well. So from this point, I go on the 1 minute, and we have the 50-minute sweep liquidity. We have the 50-minute bullish imbalance that's being respected, midpoint being respected with the bodies on the 15-minute. And what I'll do this time is I'll utilize this midpoint. This is a place where you can take partials as well. Prices going from that discount to that premium. And so that is a point where you can see some sort of resistance, where you can take partials. So there's the midpoint of that dealing range. If you put it right here, you'll see this is the midpoint right there at 386.25. We'll just move this up slightly for the coordinates. 386.25 right there. So now we have the midpoint of the dealing range clearly plotted. So we have that point and then the opposing liquidity that you can target as well. We get that confirmation, 50-minute sweep, 50-minute bullish imbalance. Higher time frame objectives are to the upside. On the lower time frame, we're seeing a potential reversal here. Potential state of delivery being confirmed as bullish on the lower time frame. Potential breaker formation as well. We have this fair value gap that we can utilize as our entry. So from this point, we would wait for price to retest this. We would enter there, stop below the low. We're in that discount of this range. So this is an optimal place to look for longs. And so you can target, scale at that midpoint of dealing range and target that opposing buy side liquidity. Now we get that internal sweep here. You get a potential breaker here, not the most optimal looking one, but still one nonetheless. And like I said, now I'm showing you can utilize that dealing range, the midpoint, to target. It's a place where price will react to oftentimes. And so it is where we're crossing from that discount to that premium, or premium to discount, depending on if you're long or short, of that dealing range. So you can see times where price will form a bit of a resistance at that level. Then you have the opposing liquidity, clear highs above here. And so this is all engineered for a ideal, optimal long here. So we would wait for the retest. We got it right there. Enter upon the retest of this fair value gap. Entered there off that sweep. 50-minute bullish imbalance respected. Midpoint respected. Discount of dealing range. So if we recap this, like I said, 50-minute sweep of the sell side. 50-minute bullish imbalance respected. 50-minute midpoint of the bullish imbalance respected with the bodies. We're in the discount of that dealing range. Lower time frame, we get the reversal. We get that fair value gap. We get the breaker form. We get the retest of that fair value gap. All in the discount of that dealing range. And so when you retest that fair value gap, you enter and you target the midpoint of the dealing range. You target the opposing liquidity. And then you see how price reacts from that point. And so you can see just a beautiful move, beautiful delivery, 3.85 risk to reward there. Almost 200-point move to that opposing buy side liquidity, opposing end of the dealing range. Partials can be taken at the midpoint here. You see, as we cross over, a huge displacement. This is an amazing sign if you're a bull. When we go through that midpoint and we form an imbalance, we displace and we come retest and respect it, that is an amazing sign for higher prices. And clearly, once we displace, once we form that imbalance, we come, wick in, retest, respect it right away, continue that leg higher, and throughout the whole leg, bullish imbalances are being respected. So just a beautiful move stemming from all those confirmations and finding that optimal entry that is in the discount of that dealing range, an optimal fair value gap to take. And so that's how you utilize the dealing ranges to your advantage. You can use it as places for partials, and you can use it to locate where the optimal entries will be, whether you're going long or short. And so in this case, you're seeing we're in the discount of that dealing range. This is an optimal place to take a long if you have all the other confirmations for your model as well, and objectives, draws are to the upside. In this case, we have those. So we get a beautiful, beautiful setup, beautiful move, beautiful entry, retest, go to the midpoint, displays past it, and then beautiful move to that opposing liquidity for almost 200 points, 3.85 risk to reward. So that's how you can utilize dealing ranges to your advantage. I hope you got some value out of this. I wish you all good luck. Study the dealing range. Know how to utilize it to your advantage. I wish you good luck and good trading, everyone. Take care.